Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Brent Jackson, founder and CEO of Torpago, to discuss the advantages community banks and credit unions have when compared to the larger banks. Brent, it's great to see you. Welcome to Trade Talks.
Jill, thanks for having me.
You got it. 2023 is a tumultuous year for the banking industry with the collapse of SVB, First Republic, Signature Bank. What has been the impact for regional banks and how have they responded?
Yeah, you're spot on. 2023 was a rough year so far for community banks. They've been focused on retaining and growing their deposit bases in the wake of that collapse that you mentioned. In order to do this, we've seen the primary lever that they've been trying to pull is increasing deposit rates. Longer term, we don't view this to be a sustainable differentiator on growth. We believe that banks need to focus more on their people, technology, and products. And, the goal should be for banks to improve their holistic proposition in notable ways and, really focus on the products that they're launching. We think the banks that succeed here will become more attractive to both new and existing customers. And, that will help them succeed throughout the rest of the year.
Moody's recently cut the credit ratings of several small to mid-sized U.S. banks and placed 6 banking giants, including Bank New York Mellon, U.S. Bancorp, on review for potential downgrades. What does this mean for the industry going forward?
Yeah, so I think, the primary impetus of the Moody's cut had to do with commercial real estate exposure and, higher interest rates leading to net interest margin compression. Unfortunately, Torpago can't really help too much with the commercial real estate exposure. But, the second piece is what we think is critical. Banks have to start generating more non-interest income from things like commercial cards and software fees. And, that's where Torpago comes in. We partner with a lot of banks in the sector to help them launch new card programs, new spend management programs, and, generate further revenue streams and not just be dependent on the net interest margin.
What advantages do community banks and credit unions have when you compare them to the larger banks?
Yeah, absolutely. I mean, community banks are essential to the community, right? They serve as investors in local businesses, local communities. They're on the ground with their customers, working hand in hand, living next to these customers. They have the ability to move quicker when motivated. They can make investments. They can take different perspectives and investments that they make. They can innovate quicker. Really they can act quicker and, work with their customers different than a larger institution may be able to.
What are some of the most common pain points with traditional bank credit card programs? Where are they falling short?
Yeah, so most traditional programs run on top of, incumbent legacy software that's 20 plus years old and really hasn't been modernized with the latest and greatest technology stacks. Things that the everyday consumer take for granted, like being able to add your card into your Apple Wallet or, having modern underwriting based on, verified data sets, things that we take for granted. Banks are not able to offer that to their customers. And I think they're struggling because of that. And with Torpago and with our Powered by module, we're able to partner with banks and give them a more modern infrastructure so they can deliver better programs and experiences to their users.
Well, let's talk more about Powered by, which is, of course, is one of your newer offerings. It provides community banks and credit unions with their own fully branded end-to-end corporate credit card product. Tell us more about this program.
Yeah, absolutely. So Torpago, we were founded in 2020. We started selling credit cards and spend management software directly to small businesses. Along that journey, we quickly realized that banks are in a massive need for an updated infrastructure. And we took everything we've built for small businesses over the last 3 years and put it into our module called Powered by. And exactly to your point, it gives banks an end-to-end solution to launch their own fully branded credit card and software programs that they can resell to their new and existing customers. And really just gives them a more modern infrastructure, easy to use solution and, best in class, software program that they can, resell to their end customers.
Well, Brent, let's talk about this a bit more. What do you see being the biggest trends or changes in the banking space in the next few years? Do you expect larger money center banks to acquire some of these newer fintech offerings that are out there? What are you really keeping your eye on?
Yeah, so I think 2 big things. The first one you hit on is consolidation. So I think a lot of bigger banks are on the sidelines right now doing a wait and see approach, and they're going to start to consolidate both smaller banks and other fintech providers. I think over the last couple of years, you've seen a big boom in fintech. A lot of venture-backed companies have been acquiring a lot of customers, building a lot of valuable technology and infrastructure. And I think a lot of the larger banks are going to start to make more acquisitions. Also, modernization is a big thing. So banks of all sizes are going to be looking to, beef up their infrastructure, right? Whether it's better credit card programs, better online banking experiences. I think you're going to start to see, a new wave of technology and modernization. And those will help banks capture more deposits, get more customers and generate additional revenue streams. And that's really where we see Torpago Powered By coming in is, helping these banks to achieve those goals and, to grow their customer base.
All right, Brent, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Yeah, thanks, Jill.